Okay guys, welcome back to the channel. Thanks for tuning in to today's video. We've got a brand new series. This series is called The Psychology of Trading. Now in this series, we're going to be doing short videos, 5-10 minutes long, focusing on niche, emotional and psychological topics such as trading anxiety, impulse control, FOMO, trading strategies, and so much more that is all centered around managing your emotions, making your mindset more resilient, and bringing you guys to a whole new level when it comes to trading and overall management of your emotions when trading. Let's go ahead and dive right into our first episode. This episode, we're going to be discussing a really important topic. And this topic is something that we all face, and this is managing your losses and coming back from them emotionally. And I guess I'd be lying if I said I didn't have a trade in my trading career where it knocked me down emotionally, knocked me down hard. And I feel like everyone watching this video, if not most people watching this video, has had that same experience. A trade that they've taken that just went so far out of control. And when they finish it, they just sat back and said, what the hell was that? You know? And I feel like this feeling is a feeling that helps you become a better trader. I'm gonna say that. It's a feeling that you have to experience as a trader. And I don't know any professional trader out there who hasn't been knocked down so hard by a trade, it almost knocks them, it hits them into a position where they're forced to actually take risk management more seriously. That's not really what we're talking about today. We're talking about how do we come back from big losses? How do we come back from losses? And how do we emotionally deal with the fact of losing when trading? Because it doesn't matter how good you are, it doesn't matter how long you've been trading for, how much money you got, what your hit rate is, losing is part of the game. Every single trader on this planet loses. It is impossible to avoid losses. You cannot possibly get to a point of proficiency and skill where you completely avoid losses, because many times there are things that occur in the market that is completely unpredictable, or the market is completely irrational and moves in opposite or sometimes sporadic directions. So what can we do to implement? What can we do to affect our emotional control when taking losses? Well, it comes down to a few things. Number one is strategies. We can implement strategies to avoid us getting into that position in the first place. And number two is understanding of the emotion and why it occurs. So number one, how can we avoid, these emotional downturns, these periods where we get knocked down, we feel depressed, and we feel anxious? How can we avoid that in the first place? Well, as a new trader, this is something you're going to be experiencing a lot. As a professional trader, I've definitely grown past the point where I am shifted emotionally from losses. But as a new trader, and most of the people over here will be new traders, you will notice that any loss may shake your self-confidence, make you feel anxious, make you feel, a little bit of anxiety when entering your next trade, or maybe even feel like, you've been defeated, or you're a failure, or you just want to give up. All of these emotions are completely normal. So what we do, we have to understand that these big emotions come from big losses. So how do we eliminate these big emotions? Well, we have to eliminate big losses. Particularly when you're new, you should be making sure you trade with effective risk management. You really shouldn't be exposing yourself to big losses or these situations where you're going to be ending up in these emotional crashes in the first place. So obviously that's a topic for another day, risk management, but focusing on risk management, making sure you're aware of your capital investment, making sure you're aware of your loss, and more importantly, that you accept the loss before it occurs. So number two is understand kind of why we feel like this. Understand what it is you're feeling. And from there, you can go ahead and then maybe implement some strategies or fix the way you think about a loss, which can therefore impact how you feel. And we're going to kind of bridge off that. Think about how you feel about a loss. As we've said before, every single trader loses in the market. Losing is an inevitable part of the game. It will happen at some point to everyone. Okay? So we have to be able to differentiate or kind of steer away from the common misconception that is definitely more prevalent with the new traders, that a losing trade is a bad trade and a winning trade is a good trade. This ideology is completely false when it comes to long-term consistently trading. It is completely false. Let me give you an example. You look at the markets, you're scanning the markets, you see a coin or a trade is up 15%. You take a look, you open it up, you see the chart, you see this big 15% green candle in the last 5 minutes. Okay, you're sitting down on your chart, you go ahead and you put a market, or you jump into that trade thinking, okay, this is the trade that's gonna make me rich, I'm gonna retire, this is the one. You put 50% of your portfolio in this trade, 15% up here, just jump in there. You don't care about a stop loss, you don't care about risk management because you're so confident that this is just gonna go to the moon and this is gonna be the one. Anyway, you jump into the trade. It's up 15%. It's up 15%. You buy, it goes up another 5%, okay? And you quickly smash that sell button and you come away with 5% profit on your $100,000 investment. You make $5,000 in 20 seconds, okay? Was that a good trade? Think about it. Was that a good trade? You made money, but was it a good trade? The answer is no. The answer is no. The trade was not a good trade. Because the way we define good or bad isn't the result, but the process you undergo before and during the trade. Before, have you analyzed the market effectively? Have you applied some basic form of technical analysis to try to give you an edge or understand the trend? 2, have you identified stop loss points, trigger points? Have you identified the amount of money you want to invest? Have you identified your max drawdown capacity? What is the most amount of money you want to lose? Have you ensured your stop loss is placed above that point so you don't lose more money than you actually want to lose? Have you got targets? Do you know when you're going to sell? Do you know where you're going to sell? All of these things define whether the trade is good. And the execution, or should I say, whether or not you stick to that plan, is what defines the trade to be good or bad. I'll give you another example. You look at the market, you see Bitcoin. It looks like it's just printed a nice bullish divergence after a 2% drawdown, and you want to take a nice leverage position. You see the bullish divergence. You see the volume turning up. It's just hit the bottom of a nice falling wedge pattern. And you say, you know what? I'm going to take an entry. I'm going to put my stop loss just below this falling wedge support line, 1% stop loss. Okay, I'm looking for a 4% gain. I've got my take profit points. I made sure I haven't invested more than I want to lose. I've got my stop loss point set. I've got some idea of the volume or the trend. I'm going to enter the trade. You enter the trade. It goes up a little bit. It's going well, but then it crashes. But you follow your plan. You hold on. You sell at your stop loss, and you're out with the desired maximal loss. Was that a good trade or a bad trade? That was a good trade. It was a good trade because you followed your strategy. Okay, and this is what's really important. You have to look at your trading as a collective amount of trades over a period of time, over 6 months, over a year. If you look at any one individual trade and assess your skill, your ability of that trade, you are always going to be facing emotional problems. Okay, it is not the one trade that defines you, but the collective. Okay, very, very important, guys. You keep that in mind when you're trading. Look at the collective. And this is why process is so important, because going back to the first example, that guy, we name him Jack, he could trade like that every single time. Guess what? He might win some, he'll lose a lot more. The second person who had the plan, who had the strategy, as long as they fine-tune their strategy, as long as they stick to their process and plan, they might lose some here and there, but over the year, they should win more trades, and that is the profitable trader. So how to manage your losses, guys? Understand the market. If you understand something, you can emotionally control and handle it better. Understand losses are a natural part of the game. Understand what defines a bad trade from a good trade. Okay, and understand that implementing certain strategies, particularly around risk management, can help manage your positions in the market and avoid you getting into big sticky messes when it comes to these emotional drawdowns or big emotional blowups. I'm gonna leave it there with that episode. I hope you guys enjoyed. If you wanna learn how to trade, you can go ahead and watch the rest of my videos on the channel. We do have a course. You can go ahead and purchase that course. It's about a 12-week course. It goes through absolutely everything from a technical standpoint that you need to master technical analysis. We really give you guys the essential tools you need to trade. And of course, if you want to follow my trades and my analysis, you can do that on Telegram, the link down below. Join our Telegram channel, you get access to all the updates, analysis, and more. Of course, our VIP channel, we get access to my trades. And of course, go ahead and sign up to BitGet and trade where I trade. With that being said, guys, we'll catch you in episode 2. Cheers.